Yesterday, the market down despite of the kind of performance that came through, as I said, from Safaricom. We're back below 4,000 points on the market at this stage. What's your view on where we're at?
I think we're at the moment, we're flatlining. I don't see any big moves higher. I think there's a risk of a little bit more deterioration to the downside, but obviously the key for this week will be the release of Safaricom's results tomorrow. And I think the market tone and market direction will really be set by whether those results surpass expectations or not. I think a lot of the negative news has already been baked into the price. The voice story has been out there since late last year. But I think investors will be reasonably satisfied if they see some upside on the data side. I don't expect a full compensation from data versus voice, but if they get something pretty close, I think that will be sufficient to take us back probably above the 4,000 mark.
If we take a closer look at Safaricom, I mean, somewhat of a surprise, the kind of great expectations that surround these earnings, at least from my end, where not so long ago the concern was, as I said earlier, that profits would narrow on the back of stiffer regulation, on the back of increased competition as well. So what's changed to affect market sentiment?
Well, I was interested because I was looking at analyst consensus, and analyst consensus was between 36 cents, with some folks reckoning 41 cents. Bear in mind they earned about 38 cents the year before. So people are looking for unchanged to about 10% lower. I think, for me, I think that analyst projection is actually above where the market thinks this result's going to come in. Market consensus is lower than that. So I think there's room to surprise to the upside. I tend to err on your side and think that the second half was extremely brutal. Zain, Bharti Airtel launched an irrational pricing strategy in the voice market, absolutely cratered revenues. We know that. I think we've had long enough to deal with that. And I think shareholders might be surprised to the upside to see a number which, if it meets the analyst expectation of 35 cents, will be a knockout number, I think.
Well, when it comes to earnings expectations, we've got lots of activity surrounding National Bank of Kenya as well, being anticipated to release first quarter numbers sometime next week, I think. What are your expectations there? Because there's lots of hype around the assumption of a dividend payout.
Well, for many years, National Bank had accumulated losses. They were unable to sweeten their shareholders with dividends. Now they're allowed to because they've cleared those accumulated losses. But I think National Bank of Kenya, rather than a story about organic growth, is really a story about when does the government allow in a strategic investor. And I think if they do that, and they've already expressed a very keen interest to do that as quickly as possible, then I think that will really govern the forward price of the share price. I think at this sort of level it looks quite cheap actually, but really we need to see some evidence that there's some seriousness about selling the stake that the government currently holds.
Well, when it comes to the banking space, interesting the kind of movements we're seeing around Equity Bank as well. It fell 1% to 24 shillings 75 yesterday. The bank stocks have been generally edging downwards for 4 weeks after hitting that high of 27.75 shillings on April the 18th. What are you making of moves there? Because some investors feeling that equity has peaked and it has more to lose from here on out.
It's interesting because the banking results Q1 were considerably stronger than I think the street expected. So we saw some very strong results. Equity Bank was one of them. That quarter grew, I think, something over 60% versus the 2010 quarter. And the share prices have not got any relief from this slew of first quarter results. They've actually trended lower. It's been across the board. Equity, as you said, traded actually a 30 and a quarter 52-week high early January, so it's slipped quite a bit from there. But I think at this sort of price, you should be looking at it. It remains a growth stock. It's on a price earnings ratio of 12.9 or thereabouts, which is the lowest I've seen it for a very long time. And Dr. Mwangi really has proved his bona fides and his ability to execute. I think the growth story remains intact. It's more of a regional one now. And I think shareholders should be looking at it at this sort of level.
Well, talking about regional stories, Kenol Kobil has been one of those plays that has been illustrating, the kind of strides it's making in enhancing its regional footprint. We saw it easing back slightly, and this after it's announced a new venture to invest $10 million in real estate. Was the dip back that we saw yesterday roughly 0.5% in reaction to that news?
Well, I think it's an undervalued share. It's a price earnings of 8.5. I think it's got caught up in the crossfire of the oil industry shenanigans we've been seeing. We have very high fuel prices. There's a considerable debate about what's actually happening. The cost of fuel through February last year, 12 months, increased by 30%. And there's a lot of unhappiness in general in the country at what's going on in that sector. Kenol Kobil itself, I think, is a very undervalued share. They continue to expand, as you say, their footprint across the region. They're bulking up. They had a turnover last year of over 100 billion shillings, which I think was the biggest turnover of any company at the Nairobi Stock Exchange, if I'm not mistaken. And they have proved their ability to execute and grow this business. It looks to me like a cheap stock, and I think this sort of price, 930, 935, looks very reasonable on a PE basis, on a dividend payout basis, on every basis that I look at.